Good afternoon. I believe the broadcast has started. My name is Gary Johnstone, and from the Texas Higher Education Coordinating Board. We're hosting the meeting update with Teacher Retirement System of Texas, and leading the presentation this afternoon is going to be Jim Pinkard. I want to let you know if you do have any questions that come up during the presentation that you want to follow up a question with Jim or with someone else from Teacher Retirement or the Coordinating Board, you can submit those email questions to my email address, which is gary.johnstone@thec.state.tx.us. So with that, I'll turn it over to Jim Pinkard.
Thank you, Gary. Appreciate it. Thank you all for those of you at home who are keeping score and tuning in. I won't bore you with any jokes because most of them you've probably already heard. But I did want to go through some slides in the next 10 to 15 minutes and then leave plenty of opportunity to ask questions and provide additional details should you see fit to want them. Hopefully you can see the slides in the presentation. The slide that we're looking at now says timeline process at the very top. And so this is an outline of what I wanted to tell you about. Just wanted to talk to you about the Settle Up. What is it? What statutory authority is associated with it? And then speak to the amounts to be paid, the 2 years, the 2 fiscal years that are involved in the Settle Up process, and then speak to the notification process that in the next few weeks a letter will be going out notifying you of what you'll need to do and all the amounts and all that stuff. Then I wanted to talk to you about the payment deadline and then go from there. So hopefully this won't be too painful. We'll see. Hearing me talk for any length of time is probably always a painful process, but we'll go from there. So I wanted to tell you about Rider 22 in the General Appropriations Act for the legislative session that just ended, the regular session. Rider 22 in the Public Community Junior Colleges bill pattern says, in essence, that a portion of each district's formula funding is conditionally appropriated and is contingent upon you paying TRS in full for retirement contributions owed for both fiscal years 2012 and 2013. So any amounts not paid will then be reappropriated to TRS. And so those amounts have been communicated previously to the Legislative Budget Board, the Comptroller, the Governor's Office, the Legislature itself, to all the associated and appropriate parties. And those are numbers that I've communicated as well, as widely and as broadly as I could. So, and you'll see those amounts again when we send out the letter to all of you. So those of you who are at TACBO, the Texas Association of Community College Business Officers Conference, which was in mid-June. At a presentation at that conference, I handed out those amounts separately for fiscal year 12 and fiscal year 13. And those amounts should be also posted on the TACBO website as well. So if you want to look at those now, you can go to the TACBO conference website, and hopefully they'll be posted on there for you to see. So, but like I said, the amounts will be communicated to all of you yet again later this month when we send out our letter. So the amounts to be paid were very simply calculated based on a settle-up methodology. The employee deposits, so the employee contributions were used to determine the covered payroll amount, which was then used to determine the total employer contribution amount. So in essence, the employee pays 6.4%, the employer pays 6.4%, and how we at TRS calculate that amount is we simply look at the amount that was contributed by the employee, we divide it by 6.4% to get the total covered salary, and that would then also give us, when we multiply it by the contribution percentage, that would give us the total employer contribution amount. From that total employer contribution amount, we deducted payments received for various purposes. If the person was paid by a federal grant, you have to pay it out of the grant. For those folks paid out of E&G, we apply E&G amounts. For new members, their first 3 months of employment, they're supposed to contribute. So all those extra amounts, for the various purposes that we collect them, they were deducted from the total employer contribution amount. We also deducted the state paid amount, or the state contribution. That left then the remaining balance each district owes. And so if you're looking at the settle up spreadsheet that I have previously shared and will share again, it's column P, and it's titled Balance Owed. And the total for fiscal year 2012 is $35.3 million, and that's across all 50 districts. And so in the Excel workbook that was posted to the TACPO website and that will be shared with you, it'll walk you through the calculations. You'll see them very deliberately. That methodology will be applied to the fiscal year 2013 amounts as well. One big, huge honking caveat, if you're looking at the last bullet on the slide that says amounts to be paid, the fiscal year 2012 data is known. We've closed that fiscal year, so those amounts will not be changing. And what makes me feel a little bit good is that I've had 3 or 4 districts call me and say that they have compared their data to the data that I have, and it works. I think I was off by $3 in one case and $20 in another. So the data is good. It's been tested. I'm reasonably confident in it. The fiscal year 2013 numbers, though, are still in flux. Obviously, fiscal year 13 is our current fiscal year, and so the amounts that I have as your projected shortfall, or the amounts that you owe us, those are projected amounts. And those amounts were projected using covered payroll data from last fiscal year and the projections I put together last November. So keep in mind that if your covered payroll fluctuated, if it went up or down, the balance that you owe TRS will react accordingly. It will go up or down because the key is the covered payroll amount. So I've already had questions where some of the districts have calculated what they think they'll owe for the current fiscal year. And in one case, I was off by, I don't know, $34,000. So the question became, should I pay the amount that you're reflecting? Or should I pay the amount that I think I owe, which is $34,000 less than you think I owe? And the answer is pay what you think you owe. I will calculate, after we finish this fiscal year, I will calculate exactly what you owe. So if you short me, or if you pay me too much, I'll still settle up with you next fiscal year. Okay? But it's important to note at this point that fiscal year 2013 numbers are still in flux because covered payrolls are changing. I wanted to move on to the notification process and speak to the payment deadline. With the assistance from Gary and the coordinating board staff, I'm going to be sending a letter to all of you in the next few weeks. And I'm going to cast a very broad net. I'm going to want to send it to your chancellors, presidents, your chief financial officers, all the TRACS contacts, your coordinating board liaisons. We're going to cast a broad net and send this widely to as many people as we think want to see it and can stand hearing it. But the intent of this letter is to give you supporting documentation so that when you pay the amounts that we're saying that you owe, and should your auditors question why you made the payment, you'll have that letter as supporting documentation that says, yes, this is what you're paying for, yes, this is an amount that you owe, here's how the amount was calculated, so they can verify should they need to do so. I'm going to ask that you pay in August. As you know, your TRACS payments are normally due by the 10th of the month. So I would encourage by the 6th of the month, right? See, I was trying to be polite and give you 4 extra days, but I'm told by our experts who are sitting in the audience here that it's actually the 6th of the month. So very early on in August, I would strongly recommend foot stomp. I would strongly prefer you pay in the month of August, very early on. You will know the amounts that you need to pay. I would strongly like to collect those amounts in early August. And let me say that one last time. In the first week in August, I would love for you to pay me. That way in mid-August, I can send a note to our friends at the Legislative Budget Board, to the Comptroller, to the Governor's Office, to our state legislature, I can communicate to everyone involved that you've settled up, we're square, we're going to move on to the next fiscal year with bright, shining smiles on our faces. Okay, maybe that's a step too far. But the point being, by mid-August, I'd love to have this settled up and wrapped up so that we can start September 1, our new fiscal year, with a clean slate. So if you could, make it easy on yourselves, make it easy on us, just submit those payments through tracks like you normally do every month. And that'll be easy. We'll be able to see it, we'll be able to track it, and then we can go from there. And I know that you can submit questions to an email address that Gary is monitoring should you have questions about that. With that in mind, with the settle up for fiscal year 12 and with the settle up for fiscal year 13 taken care of in August, like I said, by August 6th, that's the 6th day of August, this August of 2013, then we can turn our attention to fiscal year 2014, next fiscal year, which is given guidance by Senate Bill 1812. And so if you were at TACBO this year, these 2 or 3 slides, these following 2 or 3 slides, you've already seen. It's nothing new. But this, in essence, provides us with the guidance that we need for next fiscal year. So the 50% agreement that was struck in the Senate is what we're going to try to implement. So in essence, the state match will be limited to 50% of the compensation for employees who are instructional or administrative. The number of employees eligible for state match cannot exceed enrollment growth. That's an interesting part of the bill. The districts, you'll be required to remit the other half of the employer match on a monthly basis through tracks, like you make all your payments now. You will also have to submit a monthly report of salary and employer contributions required. So in essence, through tracks, you'll have to report to us, like you do now, your covered salary numbers, your employer contributions required, and then you'll have to remit the payment. And you'll have to keep all the details on file in your records, in your payroll records. At the end of the fiscal year, TRS will then have to certify to the comptroller the names of districts that have failed to remit employer contributions, should any exist. The comptroller then would withhold the amount certified plus interest from the first state money payable to the district. The first money payable to the state or to the district, that's an important phrase because that money could be formula funding, that could be financial aid funding, it could be grant funding from the state, it could be any state money that you're owed. TRS would then deposit the money received in our pension fund. This last slide does nothing more than give you my name and contact information. I'm always available should you need me. You can send me an email or call me at the number listed on the screen, which is area code 512-542-6859. And with that, let's peruse some of the questions that we had. I know I was speaking quickly. I think that was about a total of 12 minutes.
About 12 minutes. This is really not on the topic that you've been talking about, but and we may have to bring some other people up here, but I did get a question from Dallas County Community College about changes that have been made to the definition of eligibility of adjunct credit faculty for enrollment and teacher retirement. The question is that, in 2011, TRS defined adjunct credit faculty as one that taught less than half a full-time load of 15 credit hours per semester. Generally, adjuncts were limited to less than 7.5 hours per semester. It appears, according to a June meeting of the Texas TRS board, that they are considering a change that would allow adjuncts to teach up to 9 credit hours per semester instead of half of 15. Has there been any clarification on this development? And they would like to know this before they start the fall semester.
Yes, that's correct. I believe that information was published in the June update that recently went out on Friday the 27th, I believe.
It went to districts?
It went to all reporting entities.
Okay.
And there is information in there about the new definition of adjunct, and that is correct. Adjunct definition has been revised to state that a person is an adjunct, meaning not eligible, if they are working, well, let me back up. The definition of half-time employment for adjuncts and the calculation for higher education, the calculation is 1 class or credit or instructional hour equals 2 clock hours, which takes into account time for preparation and anything related to that class. If the reporting entity has designated a larger ratio, meaning they require more prep time per instructional hour, then we default to the employer's definition. If they don't have a definition, then 1 class or instructional hour equals 2 clock hours. I say that to kind of go forward with the concept that if half-time, well, if full-time is a 40-hour job, then half-time is 20 hours per week. Therefore, if someone is an adjunct faculty, they can teach up to three instructional hour classes, meaning that's 3 hours, that's 9 instructional hours per week times 2 is 18 hours per week, which means they are then less than that minimum standard of 20 hours per week. So
that's the default standard unless the college has a stricter requirement where they require
more prep time. Correct.
Or
yes.
office time. Is office time?
That does count. If adjuncts are required to keep office hours, then those hours are also included in the total. So that would mean they would be added on to the however many classes they're teaching. So if they were teaching 2 3-hour classes, that's 6 instructional hours times 2 is 12, quote, clock hours. If they were then required to keep 10 office hours per week, that would be 22 clock hours, meaning they would be above the minimum, and they would be,
Okay.
Our understanding is that is a rarity when it comes to adjunct and required things like office hours and such. But if there is that case, you do include those and add them on to the conversion that you do for class hours. So for adjunct, we have defined that an adjunct faculty minimum eligibility is 20 hours per week. Therefore, they can teach up to 3 3-hour classes per week and remain under the TRS eligibility criteria.
Okay. If all they're doing is teaching.
Correct. Yes.
Okay.
Yeah.
All right.
And for the record, that's Jennifer Clark in our reporting area.
Yes. Thank you.
Jim, I have another question. I think this is a clarification. Did Jim say to pay him what we think we owe, or was it his projection, what his projection says we owe? Well, neither. I guess this is for FY. This is for FY13. So, are we clarify that again? What you said about FY13?
Yes, I will. I will, certainly. For the current fiscal year, for fiscal year 2013, if there is a significant difference in the amount that you think you owe and the amount that I'm projecting that you owe, I would strongly encourage you to do 2 things. Number 1, call me and explain the difference and make sure I understand that. And then number 2, prepare to pay what you think you owe. Keep in mind, my projections are only as good as the data that I have, but the data that I have is going to be a little outdated. So you're always going to have more accurate, more recent data than we have. So if your payroll, covered payroll, changed, you laid off people, you hired people, you had significant retirements, whatever the case may be, if you had a significant change in your covered payroll going into this fiscal year, then the amount that you owe me will probably change as well. And so I don't want you paying me $30,000, $40,000, $50,000 more than you owe me just because my data is a year old. So I would strongly encourage you to reach out to me, make sure I understand what you're doing, and then make sure I know what amount to expect to see you pay by August 6th. Okay? I hope that answers the question. So in essence, the short reply is, I'm encouraging you to pay what you think you owe. We will settle up. We will have the opportunity to settle up at a later date.
Okay, I don't have any other questions that have been submitted, so if there's anyone out there that still has a question, please send it by email now, and if we don't get it answered before we end this broadcast, then I'll submit it to Jim and he can reply to you directly. I will be sending out the slides that were presented this afternoon to all of the folks that got the reminder this morning about the meeting. That's all the CFOs that are on our list. I'll send the slides out to them this afternoon. And I want to thank the TRS people that came over to the coordinating board this afternoon for their involvement. And
absolutely. And while I have the chance to give you a couple more minutes to post your questions, I'd like to thank Gary and Kathy Ivey, staff here at the coordinating board, for hosting this and doing all the legwork to make sure I look good on camera. I know that's more of a challenge than it might appear to be.
Okay.
Other questions?
I think
last chance. Oh, we might have a question. Bob, tell her what she's
The question
wanting.
is both fiscal year 12 and the estimate for fiscal year 13 due by August 6th?
Yes.
The answer is yes.
Both amounts, the amounts for both fiscal year 2012 and fiscal year 2013 are due by August 6th. So you have just under a month to come up with the money to submit through TRAX, which is our payment system, by August 6th.
Okay, I think that does it.
And with that, I appreciate your time. Hope all of you hear from me soon. If you don't, give me a call. Let me know what you need. Thank you.